Have you ever wondered how the stock market works? It might seem like a complex world of numbers, trends, and financial terminology that can leave you feeling bewildered, especially if you're new to the concept. Perhaps you've heard terms like bull market or bear market and felt a little lost in the financial jargon. Quite possibly you've heard about the stock market on the news, talked about it with colleagues, or even contemplated diving into it yourself. But the seemingly cryptic language and intricate mechanisms have been a deterrent. Well, fear not. This is where we step in to help you decode the fascinating world of stocks. So, grab your cup of coffee, make yourself comfortable, and let's embark on this interesting journey of understanding the stock market together. Before we get into the nitty-gritty, it's important to have a calm and open mind. Remember, like any other new skill or knowledge, understanding the stock market also requires patience and persistence. The first step is to break down exactly what a stock market is. Picture it as a giant global supermarket, but of buying groceries or your favorite snacks, you're buying and selling shares of companies. Now, what are these shares? Simply put, these shares represent a piece of ownership in a company. They are small fractions of a company that you can buy or sell. When you buy a share, you essentially become a part owner of that company. It's like having a small slice of a pizza. The more slices you have, the more pizza you own. Similarly, the more shares you own in a company, the larger your ownership stake. However, unlike a pizza slice, these shares can increase or decrease in value based on various factors like the company's performance, overall economic conditions, and investor sentiments. So every time you purchase a share, you are making an investment in the company and betting on its future growth and profits. The better the company does, the higher the value of your share. If you sell these shares when their value is high, you make a profit. On the other hand, if the company underperforms, the value of your shares might fall, and you might incur a loss. There's a lot more to the stock market than just buying and selling shares, but understanding these basics is a good start. So, let's continue this journey and explore more about how this intriguing marketplace operates in subsequent modules. Fascinating, isn't it? Now you may be wondering, why do companies sell shares? Well, it's a way for companies to raise money. When a company decides to go public, it sells a portion of itself in the form of shares on the stock market. This process is known as an initial public offering, or IPO for short. So, how does one make money in the stock market? There are two primary ways. First, through capital gains. This means if you buy a share at a certain price and the price increases, you can sell it for a profit. The second way is through dividends. Some companies distribute a part of their earnings back to shareholders in the form of dividends. However, it's important to note that the stock market isn't a one-way street to wealth. There's a fair amount of risk involved. Companies can lose value, which means the price of their shares can fall. This is why it's often said that you should only invest money that you can afford to lose. Now, you've probably heard about bull and bear markets. A bull market is when the stock market is on an upswing with prices generally rising. A bear market, on the other hand, is when prices are falling. So, to summarize, the stock market is a platform where shares of public companies are bought and sold. It's a place where companies raise money and investors can potentially make money. But remember, with potential reward comes risk, and that's the stock market in a nutshell. So next time you hear about the stock market on the news, you'll have a better understanding of what it all means. You've taken the first step in understanding this fascinating world of finance. And who knows, maybe one day you'll be the one buying shares and becoming a part owner in a company. Until then, keep learning, keep exploring, and keep asking questions.